Okay, I said it was too close to call. Just a few minutes ago, the Dow, S&P, and NASDAQ were all in the red. Now the S&P's pulled itself out by a kitten's whisker, and the NASDAQ is up 2 points. Russell is still on pace for an all-time record, up 4 points. Dow's not looking great. It's down 53 points, not the worst thing in the world. It is time to pay the power piper, and the Trump administration, along with a bipartisan coalition of governors, is working to make it happen. The group wants big technology companies to pay for the new plants that they are building to provide electricity to data centers via an emergency power auction. Our countdown closer is placing his bets on the utility sector in an AI-adjacent play. Joining me now with $544 billion in assets under management is U.S. Bank Asset Management National Investment Strategist Tom Hainlin. Tom, explain why you like utilities here. I know that there's a great need for electricity, but it makes me wonder who's going to shoulder all the costs.
Great to be here, Liz. Thanks for having us on. We like the utilities sector. We just have this undersupply of energy throughout the U.S. economy. We think that's a kind of a strong structural demand. But we also think there's opportunities, similar to utilities in other sectors. It's interesting to see utilities and technology kind of like hand in glove right now. So both hit all-time highs in October. Both have struggled to hit those new highs here in January. And usually utilities and technology don't typically act together, but you can see that connection through AI. But we also like global infrastructure. It's a way to kind of add to that utility exposure globally. Plus, you also get energy pipelines, other utilities, railroads, transportation, as the U.S. and other countries reinvest in their physical infrastructure.
Here's what worries me, or maybe it shouldn't. I want you to educate us, because I might not know a damn thing, which my floor director, James, is laughing. Utilities have traditionally been thought of as a defensive sector because they pay out great dividends. But I just wonder if the argument over hyperscalers having to shoulder it, or any stumble in the AI big spend that we've seen over the past year and a half, would somehow put those dividends in jeopardy?
Utilities have always been a policy-sensitive sector. They're rate-sensitive and then are sensitive to government policy. I think this is very normal for utility investors. I think the new is the AI element, which is this need for enhanced power generation and supply. But that's going to take a lot of building of roads and railroads and pipes and conduits and water connections. So it's really more than just a utility play of kind of those old traditional energy generators. But again, Liz, I mean, you're seeing this sector evolve from that old defensive dividend payers to really now that adjacency to this emerging technology.
Well, from tech and utilities to this so-called rotation that on certain days we see, I would think that people are starting to look toward foreign markets. I mean, the FTSE 100 has recently hit several records. And you look at, say, for example, Japan's Nikkei 225. That started to look pretty healthy in the middle of last year. So is there anything that you like in that space?
What we really like is just the broadening out of performance. So you noted, within the United States, the cyclical sectors, industrials, financials, materials, those are setting new highs here in January. You talked about mid-cap, small-cap stocks. Those are carrying forward as well. But talking about Europe, Japan, Asia, last year was really all about valuation and the decline of the dollar boosting those returns. Now it's about earnings growth, and you're getting 8 to 10% earnings growth in Europe and Japan, and north of that in the mid to high teens in emerging markets. So you don't need to have valuation expand. You just need to ride that earnings growth up, and they pay higher dividends in Europe and Japan and Asia than you do get here in large cap U.S. stocks.
Yes, in the end, earnings definitely matter. I'd like to hear that. Thanks so much, Tom. Good to see you.
Great to see you, Liz. Thanks so much.